Hi everybody, and welcome back to FANG Friday, our weekly look at the FANG stocks using our SVA valuation and charting methodology. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. In recent weeks, we have watched the market, the NASDAQ index notably, set back from its HB1 price, or 9.5 times book value, and down about 16% before rallying. The NASDAQ peak was accompanied by Nvidia, which had a nice hit at its HB8 price maximum, or 55 times book value. That stock then declined right to its HB6 price, 33 times book, where it made a perfect bottom, at least for the time being. The markets have come down quite a bit since then, and we have been enjoying a nice rally ever since. I had laid out for you the SVA approach to trading the Magnificent Seven stocks on their way down. So far, however, only Nvidia actually met all my criteria for a rebound. But that rapid-fire bounce is probably not a safe one in the longer term. Still, from its bottom to its recent highs at its HB7 price, or 44 times book, that has been an increase of more than 30%. That said, I know that if bearish markets do return, there will be many more trading rallies to come among the FANGs. When, if they do happen, if some of you may want to catch one or two, then make sure you don't miss them, and other stocks, which you can do by joining our investment community in these turbulent times by going to www.strategicanalysis.ca/pricing, as many have done in the last few weeks. Anyway, without further ado, let's take a close look at the FANGs for this week and see if there is any consensus to a further possible or even probable trading rebound. As always, before I do, I like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Okay, well, let's start off with Amazon, which had been kind of floating along above its bubble price, and on sort of indifferent quarterly news had just dropped very, very sharply. It's sort of a breakdown pullback, and it's just about perfectly reached back to its bubble price at this juncture. Now we wait and see whether it can break back again, or whether indeed that breakdown pullback is a presage to lower prices. Anyway, we're right there, so watch this one carefully. Not a good deal that I can really say about Alphabet. The stock peaked at its bubble price, and you know, there's been a certain amount of maybe I would call it hostile news to this company, including discussions of maybe a breakup or some such thing. So the stock has been drifting lower, and in the NASDAQ rally has really not done very much at all. I'd almost say the same thing about Microsoft. Again, it peaked actually perfectly at its HB2. You'll notice that it kind of looked as if it had peaked, had sort of slipped a little bit above the HB2. That's only because we got a new balance sheet and it kind of pulled down the HB2 line itself, and it actually pulled it down through the top. If you refer back 2 or 3 of the FANG Friday episodes, you'll see that it was absolutely perfectly right there. Anyway, Microsoft has, I don't know whether we would call this necessarily a rally. At least it's not falling any further at any rate, but it's kind of hanging in there. I personally suspect that allowing there to be more to come, we're going to see the HB1 price for certain. Netflix also actually a perfect hit at its HB2, and again with the new balance sheet, it's kind of pulled the HB2 line through the old price high. Again, you can refer back and you'll see that it was actually a perfect hit. It has been, it has fallen back, and it's rallied a little bit more strongly, certainly than Microsoft, and maybe if things keep on going, maybe it'll get to it back to its HB2 price, but we'll have to see. Apple, similar to Netflix, broke its HB7 price. That's 33 times book value. Has rallied, not with a great deal of conviction, but it has rallied a little bit, and the stock is very, very clearly waiting to see what the market has to bring. Nvidia has been kind of the star of the show, both down and up, following my sell on that stock. The stock smashed right down to its HB6 price, and at 33 times book value, and has now had a full one breakpoint rally, and now we'll have to see what happens. Frankly, I'm kind of wondering what is going to happen when the company reports its earnings on August the 28th. We'll have to see. Tesla, perfect peak at its HB2, dropped to its HB1 and dropped through there, looking as if it's heading higher, or lower, sorry. But funny thing happened on the way to the forum, and that is to say that it's popped back up over its HB1 price as of today. So we'll see if that can hold. Following Tesla and the trading here is can be very, very frustrating at times, to say the least. Finally, as Meta, which continues, I think, to kind of bedevil SVA investors anyway, because it's hard to tell whether this company is trying to tell you it wants to break down and go lower, or it's breaking out and going higher. As you know from past episodes, the bubble price has been a long-term high for this stock, and I've said many times the market has a memory, and this memory kind of doesn't want to let go of the past. But when you see, look at the turn up A and the fair market value, when you see things improving there, it also wants to go higher. So it's a real push me pull you at work right here. Anyway, to recap, in this market recovery, Amazon has undergone a breakdown and pullback to its bubble price, and now we see whether that's all. Alphabet is under fire, and things are very uncertain in the intermediate term. Microsoft is recovering modestly from its recent decline, but it has yet to find support or even much trading conviction, as far as I can see at any rate. Netflix is also recovering and looking a little stronger than Microsoft. Apple is also recovering from the setback. By the way, it's nice to see that Tim Cook was actually followed through and bought back a slug of shares in the past quarter, as he had promised. Tesla had a breakdown and then a pullback, but it's breaking out again. Musk has been leading us a merry chase, and a merry chase for some time. Nvidia pullback dead to its HB7 price after the bounce from its HB6. where it closed last night. Now we wait and see. My suspicion is that the definitive moment may well be the earnings release on August the 28th. My own guess is that the stock either jumps $10 or plunges 20. We'll have to wait and see. Meta, the stock, has not succumbed to the attempted breakdown. This may be the safest hold among the FANGs, as the shares are trying powerfully to hang on to their bubble price and higher. I want to reiterate what I said last week. There are two kinds of trading opportunities. The first comes from an individual stock falls to a good break point, preferably one that has caused the shares to turn before. That was Nvidia at the market lows. The second occurs when the overall market supports your decision by falling to one of its key breakpoints. At SAC, we prefer the second opportunity because there is safety in numbers. Referring to the SVA chart of the NASDAQ 100, you can see that in the last sell-off from 2021-22 and on down, the bubble price, 7.4 times book, gave us a great trading opportunity. And we are more inclined to wait for that potential opportunity, especially since these growth stocks can be volatile. And we prefer to allow history to be our guide. For your information, we go over all of the markets during our regular weekly client webinars. So if you're not a client but want to join our investing family, go to www.strategicanalysis.ca/pricing to join today. Anyway, that's all for this week. And so for now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. We'll see you next week.